Hello guys, FX Bright here, the trade guru. So on this video, I'll be teaching you guys one very important strategy. Guys, this strategy is going to make you a lot of money. It's a combination of a Fibonacci price action and a very important moving average as you can see on my screen. So guys, let's get into this video and let's start making that money ASAP. So I'll see you guys after the intro and the disclaimer roll. You can see what the market has been doing. The market came all the way from this point, formed like a head and a shoulder pattern and broke the neckline. So you can see this is the neckline of the head and the shoulder, and the market broke the neckline. Now I'm starting from here because I want you guys to first of all understand how to understand the price action itself. So this is what the market did. So I'm going to come on into this place so you can see how the price was able to break these neckline of the head and shoulder somewhere here, and we had this breakout here. Now it's very important how price chooses to break necklines, guys. Had it been this market came all the way from here and straight with one straight move broke this neckline, this will not be considered a breakout. Now I want you guys to understand the only way you can consider this a breakout is because of this move 1, 2, 3. Now the moment price is going to break out from any neckline, ensure that the market makes a move like this 1, 2, and 3. In this third move is where the breakout is considered a good breakout. If the market moved from here all the way down to this point with one straight move, it's not a breakout. Don't trade it as a breakout even if the market closed. Now what this is a video for another time, but I just want to show you guys, I just want to tell you guys this so that you have it in the back of your arsenal. Now if the market makes a straight move and breaks out, ensure you don't trade that as a breakout. Ensure you wait for the market to make another 1 and 2 move down. Now that is when the breakout is complete. But in this particular case, the 1, 2, 3 move is happening before the break of the neckline, so that's fine. 1, 2, and 3, and that's beautiful. So the moment the market makes this 1, 2, 3 move as a breakout, this is where the strategy comes in. So what we're going to be doing is that we're going to wait for the market to make a retest. As soon as the market is making a retest, we're going to be drawing our support and resistance zone, places where we believe that the market can make some kind of support and resistance reaction. So we can see someone there, we can see another one somewhere at the top here, which is beautiful. So now as the market is coming up here making this retest, we are already waiting for it at these zones, right? The moment the market gets to these zones, now we're going to take out our Fibonacci and we're going to draw the Fibonacci from the top to the down here. Now you want to ensure that these markets breaks through the 23.6 Fibonacci ratio, right? So as it's retracing up, you want to ensure that it breaks through the 23.6 Fibonacci and at least touches the 38.2 Fibonacci. So you can see this 38.2 here. It must at least touch this 38.2 Fibonacci. So we'll be expecting a retracement from this 38.2, 50 or 61, depending on what this moving average tells us right now. Now I'm going to show you the parameters for this moving average. Now let me go to indicators, and this is the moving average. So you can see the moving average is a period of 8, shift 0, and a simple moving average, right? Apply to close, and that's about it. So that's the moving average parameters. So now this is how we're going to take the trade. The moment the market gets to a good support and a resistance zone, so you can see this particular point was a good support, so the market coming here was very good. Now how are we supposed to take the entry? Because it's possible for the market to break all the way to this other point or some other point somewhere, but why should we take the entry at this particular zone? Now the reason we will take the entry at this particular zone is solely because of what will happen to this moving average, right? So the moment the market comes to this moving average and comes to this support and resistance zone, what we want to see is that the market will break the moving average towards the downside, go back up and break again. The moment we can see this second break of the market in the moving average, of price action on the moving average, this is where we take our sell, right? So what I'm talking about is that the market goes up, it breaks the moving average downwards, goes back up, then comes down to break the moving average again. The moment you can see this one, you are in for your sell on that position. Now, how I like to take this particular type of trade is that the moment I take the trade on a sell here, how we're gonna exit the market is we're gonna take our Fibonacci, draw the Fibonacci from down to this top. I'm sure the chart is looking a little bit rough, but you have to try and understand what's going on. We're going to draw the Fibonacci from this point to the top, and we'll try to exit somewhere at the 78.6 Fibonacci. So if I took the sell here, my SL will be somewhere at the top, and I'm taking the trade all the way to the 78.6 Fibonacci. So let me delete some of these things so the chart becomes a little bit clear. Now, like I said, break up and comes down, we take our trade somewhere around this point. So let's keep going. So the moment the market, now we're going to draw on the last lower low that was made by the market, and we're going to see how would have been able to take this trade. Now the moment the market breaks here, right, like I said, is very beautiful. So the next thing we're going to do is that we're going to be waiting for the market to make a retracement. So the market make a retracement. This is the good support and resistance zone right here. So I'm going to test that zone to ensure that at least it touches the 38.2 Fibonacci. All right, good. So I can see that that zone touches the 38.2 Fibonacci, and obviously you can see it touches the 38.2 Fibonacci, and it's a good support area here. Now, like I said, all we need is for the market to do something about this moving average, and we'll be taking an entry. So when the market goes here, we need it to break, we need it to go back up, then we need it to break for the second time. The moment the market is breaking this moving average for the second time, after the close of the candle that breaks, we're going to be entering a sell on this position. Remember, now we had our moving average, we have our Fibonacci already telling us that this point is a good retracement. So we need it to break it, we need it to go up, and we need it to break it again. The moment it breaks it again, at this point we'll be taking a sell position. So once we take the sell position, unlike this particular place where I used the Fibonacci and exited at 78.2, in this point, because of how short this retracement is, how I like to still come out is still using the retracement, but I'm not going to be coming out. So you can see I'll be entering the market here, but I'm not going to be coming out at 78.6. That's just to close. I'm going to be coming out at 161 Fibonacci, right? So either I'm coming out at 78.6 or 161 Fibonacci. All depends on how far the retracement went to before I enter the trade. So on this particular trade, 161, because of the distance between here and the 78.6. So if it's very short, you can extend to 161. So on this particular trade, you can hold it all the way to 161. But what is more important in this trade is to try to understand how to enter the market. So now, the moment we already have that, so what I'm going to be doing is I'm going to be checking for more retracements. So I'm going to draw this one all the way to this point. So you can see how this particular retracement was happening and stopped at 23.6. That means this is not a good retracement. So in trading, in the way I teach my trading, if a retracement stops at 23.6, I do not consider this a retracement. I consider this move one straight move, right? So this is not a retracement. So because it didn't get to the 38.2, only retracements that get to 38.2, 50 or 61 are considered good retracements. So this one didn't, so I'm just going to leave that market. I'm still going to be drawing this retracement line and finding the one that will be. So the market got to this point, is still going up, got to 23.6, couldn't get to 38.2, and it started coming down. So I'm not going to be taking this trade. It's not a good retracement. So I'm still going to be extending this retracement line until I find the one that can do what I want. So this one started retracing, got to 23.6, couldn't get to 38.2, and it started coming down. So that is not my trade. So I'm still going to extend that line all the way. Now we have somebody that got to the 38.2. So you can see this one out here in the 38.2 Fibonacci. So that is very nice. So the moment it got to the 38.2 Fibonacci, like I said, once I get into the 38.2 Fibonacci, I'm already pulling out my zone to try to capture good support and resistance area. So so you can see this place is a good support and resistance area. You can see price also had a very good support and resistance area somewhere here, so which is very nice. But like I told you, what is important is this: the moment price has been able to get to these zones, which is the 38.2 or the 50, any of these zones, that is very important. What is our entry? Our entry is that price is going to break this support, this moving average, this yellow moving average. Price is going to break it, price is going to go back up, and price is going to break it down again. The moment price breaks, comes down and closes below it, this is our entry. As long as the first two criteria are already complete, in other words, our moving our Fibonacci and our support and resistance area for the retracement is already happening. So price comes, break, goes back up, and comes back down again. The moment we can see that, we are taking our entry. So this is the first break over the moving average somewhere here. So we're going to be taking our sell from there. And like I said, I'm going to be taking out my Fibonacci to try to get my take profit. So my take profit is going to be at the 78.6 Fibonacci, right? So you can see I'll be taking the trade here, my SL just above, and I'm putting my TP at the 78.6 Fibonacci. So this is going to be giving you very good risk to reward ratio, and you're going to be making a lot of money from that trade. So the next thing we want to do after we get our TP here, right? So we're going to draw the where we want price to break. Price needs to break this particular point before we'll be looking for another trade. So I'm still going to put out my Fibonacci, right, and start tracing and finding who we get to. So you can see this particular one got here, it got to the 23, couldn't get to the 38.2, so that is not a good retracement for me. Obviously this one retraced, but it got to 23, couldn't get to 38.2. That is not a good retracement for me, so I'm going to keep stretching it. All right, good. So this particular one, you can see it got to the 38.2 retracement, and that is beautiful. So the next thing I want to do, like I said, is I'm just going to find out what is going on there. So you can see obviously this particular point being a good support and resistance zone. So you can see how price reacted to these zones around this side. So the moment price came here, that is very beautiful. And now it's time for my entry. What is my entry? My entry is that after price has gotten to this point, price must break, go back up, come down and take this break. So at this particular point, the moment I see another red candle closes below like this is beautiful enough for me. So I'm taking a sell somewhere around this point. The moment you take a sell somewhere around this point, what you're going to do, like I said, is you're going to take out your Fibonacci, draw again, and you'll be coming out at the 78.6. Sometimes because of how short this might be, you can also trail a stop all the way to the 161 Fibonacci, but 78.6, 161, those are the good places for you to take your TP. Put your SL somewhere above the high, right, above this particular high that brought it down. So put it somewhere up there. So now the moment I see that, let me remove that. So that is beautiful. That trade was a good win. So I want you guys to notice the beauty of the strategy is about the entry. The moment you're able to get that very good confluences that you're looking for, the entry is very important, and you can see how spot on the entry. You can go into your time frame, any time frame, and begin to test and back take the strategy, add it to your arsenal, and see how you can work with it. Now the next thing we want price to do from here is that price breaks this particular support and resistance zone. So I'm going to be taking out the Fibonacci as usual, right? I'm going to be taking out the Fibonacci as usual and trying to spot retracements that we get to the 38.2. So you can see this one got to the 38.2 somewhere here, and obviously these points was a good support and resistance area. You can see how price reacted You can see how price reacted when it came down to this point, did all this. So the moment price is coming back here, this is a good support and resistance area. But what is important, like I told you, is the entry. After you've gotten the Fibonacci, you've gotten the support and resistance area, the next thing for you to enter the market is that the price will break, go back up, come back and break again. The reason why this is like that, this entry is very, very accurate, because the entry is also a sort of a price action entry that gives you like a double top, right? That's why it breaks, comes down, up, goes back up and breaks again. It gives you an idea of a double top, but we are using this this moving average as the yardstick for that double top. So the moment price breaks again, closes, we'll be taking a sell somewhere around this point, our SL somewhere at the top there, and we will be taking our Fibonacci somewhere here, and we'll be exiting at the 78.6, or we can trail a stop loss all the way to 161 below there. So guys, this is how the strategy works. Very, very accurate, and you're going to make a lot of money trading this strategy. So guys, do like my video and subscribe to this YouTube channel for more very, very good content. So guys, I'll see you guys in my next video. Also, my WhatsApp number is at the description of this channel. If you want some mentorship, you want to ask me some questions, do contact me. So I'll see you guys in my next video.